Hey everyone, over the last couple of years, PSU stocks have generated humongous wealth for their investors, especially the stocks within the theme of railway, defense, and banking. But there are a lot of investors who do not like to have exposure in PSU stocks. Honestly speaking, I'm one of them. Except for IRCTC, where I invested at very low levels, I don't have exposure to PSU stocks. My reason is that I always prefer private companies because I find them more efficient, are well run, with deep desire to grow as compared to public companies. Now, it's not just me, I'm sure there are a lot of long term fundamental investors like me who prefer private companies over public. As a result, sometimes PSU companies trade at very cheap valuation that make them very attractive. And that's where recently I came across a very fine article posted by Mr. Sanjay Bakshi. I don't know how many of you know him, but he's one of the finest professors in India in the field of behavioral finance and valuation and a firm believer in value investing. He did his master's from London School of Economics in 1991 and served as visiting faculty in MDI Gurgaon to teach behavioral finance and valuation for almost 20 years. By the way, MDI Gurgaon is one of the best private schools for MBA in India. Now recently he posted an article on Smallcap PSU company and explained its business model that made me realize how wonderful the business is and the very reason why I decided to do an in-depth study and discuss with you all today. I'll also share the article link in the pinned comment if you're interested. Okay, let me not create a lot of suspense. The company name is MSTC, that is Metal Scrap Trade Corporation. A small cap PSU with a market cap of just around 3,800 crore and commands a P ratio of about 17. Honestly speaking, I never tracked this company before I read the article. And even DIs and FIs don't have any major stake in the company. It is also not a popular stock among analysts, so you would have rarely heard about it. The name Metal Scrap Trade Corporation itself sounds boring, isn't it? Now the question is, what is so special about MSTC? In simple words, its new business model. So over the next few minutes, I'll help you understand the old business model of the company and its new business model along with its future growth prospects. And then let you decide whether you find it attractive or not. But before that, just a disclaimer that this video is only for educational purpose. It's not a buy or sell call. And the credit for this video goes to the article posted by Mr. Sanjay Bakshi. I also have an exclusive video series for serious long-term investor where I share one exclusive video every week that include my own investment strategies and the portfolio along with a lot of wealth creation ideas. You can explore them on my website. I'll provide the link in the description. Alright, let's get started with this video. If you look at financials of MSTC, it looks like a disaster. Forget about growth. Company's revenues have fallen from levels of 5,500 crore in FY14 to current levels of 730 crore. Clearly, it looks like a declining business, isn't it? Then if you look at the operating margin, in the past its margins were in single digit and in some year it was even at a loss. However, look at the last 3 years of operating margin of the company. From -7% in FY21, it increased to 1%, then 27% and now it's staggering 36%. And its operating profits have jumped from -51 crore to 261 crore. The question here is, why MSTC margins have jumped from single digit in the past to as high as 36% in trailing 12 months? The reason is change in business model. So earlier, as the name suggests, MSTC was involved in trading of scrap metal. For many decades, MSTC acted as a facilitator for procurement of industrial raw material like your heavy melting scrap, then low ash metallurgical coke, then HR coils, then crude oil, naphtha, then coking oil, coal, steam coal, etc. for supply to industrial customer. This was essentially a trading business in which company would receive order for customers, then it would procure the raw material, hold it in its own inventory, then it would sell it to customer at a small markup over cost. The problem with this business was that it was highly capital intensive. It required a lot of capital. As a result, operationally MSTC never commanded double-digit margin and its return on capital employed was also very low. On top of this, many of MSTC's privately owned customers, by the way, MSTC has got both government and private customer. So many of MSTC private customers defaulted on their obligation to pay the company for material supplied to them. This resulted in huge bad debts which significantly impacted the earnings of the company. If you look at company's P&L, in expenses, its major expense was from material cost. It was nearly 90% in 2014, but then it kept on reducing all the way to just 8.8% in 2023. Now the question is, what resulted in such a drastic fall in company's material cost? And how did MSTC manage to improve its operating margin from single digit to as high as 36% in trailing 12 months? So basically, MSTC completely changed its business model from its legacy low profit trading model to e-commerce. Yes, it has now become a digital platform where it conducts electronic auctions, that is e-auction, primarily on behalf of Government of India and related parties like government-owned companies. For instance, in 2022, the Government of India auctioned 5G telecom spectrum with help of MSTC. This complex auction generated more than $18 billion for the government. Likewise, in FY22, MSTC was given the exclusive right to conduct e-auction of 7,665 liquor shops in 34 districts in state of Rajasthan on behalf of state's excise department. Then public sector banks hold a lot of assets like land, building, apartments that are seized from defaulting borrowers, and they must sell to recover loans that have turned into NPA. In FY22, MSTC helped Indian public sector banks sell 6,134 properties for about $650 million. Likewise, recently it conducted an auction to sell coal worth 340 crore for Coal India. I hope you got a fair idea on what kind of e-auction MSTC conducts. The most interesting part of this is that the scope of this auction are not just limited to minerals or 5G telecom, spectrum or property sale or liquor shop auctioning. The scope is huge. For instance, in India, many temples receive enormous quantity of gold and jewelry from devotees as offering to the god. These valuable assets need to be converted into cash. That's where temple trust in the South Indian state of Karnataka and Tamil Nadu have hired MSTC to help them in this matter. Moreover, MSTC is also focusing on the untapped e-commerce business from private sector and has signed big ticket agreement with Reliance Industry, then Indus Tower, Tata Power, L&T, Jindal Group, Vedanta and so on. Here please note that the nature of their business is a bit lumpy. For example, telecom spectrum sale doesn't happen frequently, whereas sale of scrap metal by government-controlled steel companies produces a significant and regular income stream for MSTC. So you can't expect a consistent quarter-on-quarter increase in performance. This is important to note. Earlier, these auctions were not done digitally and that resulted in many scams like coal mining allocation scam, 2G scam, etc. But now government want to be completely transparent and fair, and hence these auctions are happening digitally where MSTC is playing a key role. Interestingly, the scope of their e-auction also includes sale of scrap, then surplus stores, then old plant and machinery, e-waste, and obsolete items belonging to different branches of both state and central government across India. And if you are aware, Indian government has introduced vehicle scrappage policy where passenger vehicle after 15 years and commercial vehicle after 20 years would go through a fitness test, and if they fail, they would be scrapped. So just imagine the amount of scrap that would generate in the future. Company estimate that around 1.5 million vehicles owned by government and related parties are approaching end of life. So this is going to be a huge opportunity for MSTC, and its e-commerce platform will enjoy monopoly rights too. In fact, MSTC has also done a 50-50 joint venture with Mahindra and Mahindra to recycle the metal scrap. I'll shortly come to that. But for now, I want you to understand the e-commerce business model of MSTC and why it can be a potential wealth creator for the company in the future. So the best part of e-commerce business is the scale you get. You are not confined to a particular geography. Now initially, it might cost a lot to build such an e-commerce platform, but once it is scaled, it becomes highly profitable because unlike a physical factory, e-commerce platform does not need to be built again and again to achieve economy of scale. What it essentially means is, as the e-commerce business would grow, the cost of operation does not increase in that proportion. It means higher the sale, higher the profitability. No wonder today many e-commerce companies command a huge market cap. Here the most important aspect is network effect. It means a platform becomes more valuable to a seller if it attracts more buyers. And in turn, buyers go where the sellers already are, which makes the website furthermore attractive to seller. And that creates network effect. And MSTC has created that network effect. Moreover, MSTC also enjoy a monopolistic rights to auction the government resources. That is the reason its margins have significantly shot up from single digit to as high as 36% in trailing 12 months. I hope it makes sense. Today, e-commerce platform contributes the most in company's business. For instance, in H1 of FY24, It did a revenue of around 321 crore, and out of which e-commerce contributed 185 crore. So nearly 83% revenue of the company is from e-commerce as of today. Going forward, as the scope of their e-commerce business increases, I expect their platform to generate more profits. Moreover, MSTC is also into the business of creating e-bidding solution for other government entities. So that's more of an IT solution business. And MSTC is already a cash-rich company. If you look at the cash and cash equivalent, company is nearly 1300 crore worth of cash. Here, please note that a portion of this cash, which is nearly around 700-800 crore, include deposit from every bidder for auction. This is to ensure that only serious bidders are entertained. After the auction, this money is refunded. But MSTC enjoys a good interest on this money. Now, if you recall earlier, I mentioned about the 50-50 joint venture between MSTC and Mahindra Group for metal scrap recycling. That name's Mahindra MSTC Recycling Private Limited. And this business has just started. After government policy for vehicle scrapping, it has created a whole new world of opportunity for metal recycling industry. So here MSTC would benefit in two ways. First, it would be the only auctioneer for government. So it will fetch a specific commission on the auction in the range of 2 to 3%. Please note that it is much higher than its current revenue, which is just 0.12% of gross merchandise value in FY23. Second, if MMRPL wins the bid for scrap metal, MSTC would earn revenue from recycling of metal. Finally, I want to discuss about its another subsidiary, Ferro Scrap Nigam Limited, where MSTC hold 100% stake. So FSNL has generated a revenue of around 500 crore in FY23 and pre-tax profit of around 50 crore. Now this business is up for sale and Government of India has started the process of divesting it completely. The sale proceed will come to MSTC and it's likely that company will either distribute part of it as a special dividend or it might, let's say, invest in the recycling joint venture, which is a profitable but capital intensive operation. Now, if you look at valuation of MSTC, currently the share is trading at around 550 rupee at a P ratio of 17. Now, considering the business potential, I think this is a very attractive valuation. It's just a 3,800 crore company and their e-commerce business has recently started a few years ago. As the business would scale, company would generate good profit and I expect the share price to grow. Again, this is not a buy or sell call. Please do your own research before investing. Interestingly, MSTC also pays a good dividend. At current levels, its dividend yield is around 2.7%. Now finally, I want to highlight a potential risk before we close this video. So first of all, like I said earlier, a portion of their business is lumpy in nature. For instance, telecom spectrum. It means you can't expect consistent growth in every quarter. It would depend upon auctioning. Second, the Government of India has another entity called GEM, that is Government E-Marketplace, which is used for procurement. For sale, however, the government relies to a very large extent on MSTC. It seems there is no significant overlap between these two entities. And third risk would be related to your cyber attacks or technology risk, as now it's a digital platform business. I hope you got a good sense of MSTC new business model and why it looks promising. Now let me know, what do you think about MSTC? I don't want to stress this video further. This was just to share my knowledge with you all, which I learned from Mr. Sanjay Bakshi's article. If you want to stay tuned with more of such informative video, do consider subscribing to this channel. I'll see you next video. Till then, take care.